Right. Good evening. This is Giuseppe Basile. I'm the Instant Trader. You can find at the website www.fibstalker.com. And good evening. It's 11:30 p.m. time in Toronto, and in this video I'm going to review for you 4 of the major markets I follow. This video is a daily update for tomorrow, May the 7th, 2014, and those who follow me know that I do these daily updates which complement my weekly review I send out to my free newsletter subscribers. So if you want to become a free subscriber, just very simple, go to my website www.fibstalker.com and sign up for free. I hate actually spam as much as you do, and you're always in control. You can unsubscribe at any time, so don't be worried about that. So let's look at this market here. What we see here is the pound versus the US dollar. Those who follow me know that I was looking at a sequence of measured move for this market. The sequence failed, but this market actually continued higher, as we can see here. The failure was at end of March, when we saw price moving below 164.70. 164.74, and as you can see today, price was brought into this first target, and that's what I call a busted setup. While a setup is busted, sometimes it has the possibility to continue higher into the first target. So when we had the confirmation that this area that initially failed could actually start supporting a move higher, it was when we broke this. Excuse me. We first participated to this 164.66.45, but then the all the way halfway back actually played out here, and showing that the bulls were ready to keep supporting this price despite the failure we had at this level. So this is the situation at the moment. This market has hit the first target, and actually I'll look at this market for the first time this way, but we could actually also look at this measured move here, and I never looked at this measured move, and that's a potential. Anyway, this the bottom could actually could be picked up with a little bit more risk, starting the sequence of measured move lower. I'm not gonna go there. What I want to notice on the other end is that this 166.85 has actually supported price and brought price into first and second target. So if we get a retracement now on the daily time frame, if this market continues higher, the first thing you will need to do, you will need to test the next measured move long, and of course this market could just continue higher, but at some point it will need to trade the next extension long if it was to continue higher. So from these recent highs, if we break this 168.86, is going to be another proof or indication from program trading that program trading is not willing to support this market anymore, and in that case we would see a retrace, and the retrace would come into a level that is probably going to be the previous anchor to the new high. So if we get a retracement here and the retracement breaks 168.86, we are going to move into 166.25. That's where we are going to see this price. Moving to the Australian dollar versus the US dollar, we saw this initial move higher, and we saw this strong move higher, which in my belief was not due to strength in the Canadian dollar, but rather, the Australian dollar, but rather weakness in the dollar. You will remember that we had a trade here, and it was obtained by actually timing the timing actually not this measure move, but the failure of a measure move on the 240 minutes here. And you can read can actually read the article that I wrote on this. We had this failure and then the market hitting this 93.12. The bad thing of this is that for this kind of trades there is no target, because there is no area of resistance. The area of resistance is starting at 93.30, and as you can see today was pierced because price went above that 93.62. So one of the two positions was stopped out. Now we have to decide whether we are going to actually whether we are going to remove the other position as well, which was which was much higher. And the reason for that is that simply the dollar could actually keep bringing this price higher. So we could make the case here that we had this trade and the market actually pushed into the first and second target. So one level of potential support to see whether this market is going to continue is this level here, and this level might have been already traded here, the 093 20 93.30, and let's see 28, the low was 93.31. So this level indeed has traded and has now the potential to keep moving prices higher. So the indication in order to keep the other position would be if we break below 093.17, then you can keep that position and there is a possibility for this market to continue lower. Otherwise you can remove that position with a gain, and you know, and the most important thing is that we have to trade by looking at risk first and then gain later. So you know, if a trade is well executed and we get a free risk trade, we don't have to worry what the market does. In this case, the market is not obviously helping us because the level that I indicated failed. So it's possibly we are not going to see this market continue lower, at least not at this stage. Could climb higher and retest later on. Or and now that we broke this 093.62, it could come to the old halfway back here. And if that happens, we need to see how the market behaves at this 92.80, 92.90 area here. So anyway, I mean, congratulations to those who took the trade. I mean, it was very well executed. We got through this trade and I'm happy about that. So it's not about you know, the money, it's about the process. It's not about gains, it's about following a process, because then when the market, it's not in specific situations like now where there's a lot of indecision in the euro, there is a lot of you know, fear in the dollar, things of course excuse me, not always play the way program trading is looking at those. Another interesting market is US dollar versus Canadian dollar. You remember that we were able to identify this level of support here, the 109.14, and that was identified with a couple of weeks. This is the weekly time frame, what you see here on the screen. And this level has been tested once successfully, then the resistance at 112 has been retested again, and the market came back, held the 108.40 level here and started moving higher again. Now, due to the move in the US dollar, what is happening now is that this level is being tested again. Now, can we bet that this level is going to be breached? We don't know that. So I mean, don't make any assumptions here. I never do any assumptions on the market. So what I see here very clearly is an extension short, which is very interesting now, because we have a guide now that we can use to see and study. So what I'll do, I'll actually remove the blue line here and use dark red for the line that is of our interest. So I'm actually going to, like a hawk, I'm going to watch this level 108.44, because if that level breaks, then we're going to have a very interesting retrace, or a potential for a very interesting retrace here in this market. And you know, this is the daily, so I don't want to confuse here. Let me remove this. I just don't want to confuse. As you can see, this is the daily chart. I don't know why I had that, but that's okay. It's not a problem. So on the daily chart, then, if that level is actually broken, what happens? Well, it happens that we are going to put in discussion at least all this move higher, which means that, you know, at that point we would see a retracement into the old halfway back, and that would be the first level would be 104.53. But still we are not there. So what we can do, this market could actually, as it, you know, first and second target of this measure move on the daily. So the next level is going to be the lows to lows, and magically, you know, that's the implementation of the fib stalking technique here. We are testing an area of support which has been tested successfully already twice, here and here. So if price goes above 109.1718, then there is another test, and we can actually take along with a stop. It's going to be risky, of course, because of the dollar, but it is what it is. Lower your risk. Moving to the New Zealand dollar versus the US dollar, I'm going to read an article on this as well, in response to one of my followers who actually proposed quite a complex plan. I mean, I'm as you can see, I'm a very simple student of the market. I mean, I try to look at what program trading is doing. My method is as much reactive as you know, a forecasting method here. And when we get to New Zealand dollar versus the US dollar, which is what you see on the screen, this example shows the full power of following program trading to actually frame price. And you will remember that back in beginning of April, this 085.45 3 extension long worked, but then, you know, price came short to this first level that is actually located at 087.68. And look at the beauty of it. This level was retested. We used again the fib stalking technique here to test this area of support. I was thinking that this would be pierced, but then, you know, that's the beauty of the fib stalking technique. It allows you to stay objective and have a procedural method to test an area of support and resistance. And by the way, I actually made a presentation on the fib stalking technique now 2-3 weeks ago on fxtrade.com, and it was quite interesting. So this is another application of it, and as you can see now today, price went just into that 087.68. So there are two possibilities: whether we continue higher, or this market will continue moving in a very strange way, and the majority does not understand why this price is moving like that, but it's actually just respecting a sequence of measured moves. And if he comes back, this is the new level that we have to test, so 85.85, 85.90. Excuse me. So this is, you know, the equivalent of this area of support that we saw before. If price pierces this 85.40, no panic in this market, because the daily shows a clear sequence of measured moves, and the next important level of support that program trading is going to watch is going to be now, if we don't print new highs, this 84.17. So this is it for this market update. Thank you very much for sticking around and watching it. Congratulations if you took the positions in some of these markets, especially New Zealand dollar versus US dollar, and Australian dollar versus Canadian dollar versus US dollar. Thank you very much for your attention. Have a great evening and great trading day tomorrow, and thank you. Bye bye now.